So let's talk about this upcoming recession. We know we're due one. There hasn't been one now in 12, 13 years, and historically we get a recession every 7 to 8 years. We're going to talk in this video about what a recession could mean for your cryptocurrency or Bitcoin, and really what we can do about it. Quick pause, guys, because this is actually one of the solution providers and it's the sponsor of today's video. A thank you to Nexo, where you can unlock the power of your crypto by earning interest up to 17% annually. And right now, using the link in the video description below, guys, you can sign up and earn $100 in Bitcoin just for signing up when you deposit $1,000 or more. So the first thing to understand, really, guys, we've all heard of recession. We know it's not a good thing. Well, if you're an investor and you want to accumulate wealth, recessions are pretty good things. But for the general economy, they're seen as negative. Let's talk about what a recession is, the causes of the recession, and then we'll talk about how you can safeguard yourself where it comes down to risk assets like cryptocurrency and Bitcoin, and when you're already holding them, like myself, what I'm currently doing. So let's kick things off here. What exactly is a recession? A recession, technically speaking, it's a slowdown in economic growth. It's actually a decline in GDP, which stands for gross domestic product. Now, GDP is often listed as the cause of a recession, but it's more of a warning signal that it is a recession that's already underway. So kind of a leading indicator. The way that they measure GDP growth or decline is actually quarterly. So you will always already be in a recession before you're technically in a recession. So in this video, we're going to be going into why I think there's a recession. I've made a list of different things happening in our economy right now. So let's look at these causes, because causes of a recession, they can be for a multitude of different reasons. In fact, you could look at the 2008 recession, also known as the credit crisis or credit crunch. It was a housing bubble. It was basically caused, guys, by irrational exuberance into housing. Lenders borrowing out money basically to anyone that just said I had a job. There was no real checks in play, anything. Basically, people that couldn't actually afford the homes. Many thought that housing prices could only go up and only go up forever. Obviously, low interest rates in 2004, 2005 helped to create this housing bubble. And that housing bubble, in fact, still exists. But in 2008, instead of letting the economy really fail, although there was a recession for a year or so, we obviously stimulated our way out of that one. Then we had what I like to call like a mini recession. It could have been a bigger recession in 2020, which was basically the pandemic, the COVID-19 black swan event. The US economy contracted by 5% in the first quarter of 2020. However, basically, again, they printed their way out of that, causing the inflation that we have today. A lot of you have heard we're having rising inflation, and this leads me to what I believe the causes of the 2022 recession will be. So the first thing that I'm looking at in the market is an overall loss in confidence as in the investment in the S&P, for example, in other equity markets. We've already seen equity markets take a big hit since November last year. Things obviously were overheated, and this was going on prior to what's happened in Ukraine, Russia, which of course is a big, well, let's put it this way, it doesn't help with a recession, a war, because it has a big ripple effect on the whole economy. Obviously, we have sanctions going on with Russia, and how that has an impact on the global economy could be quite significant. It could be much more than we even believe it's going to be. So another cause of recessions is often high interest rates. Now, at the moment, we have very, very low interest rates, and we've had very low interest rates for a long time. Now, all this cheap, easy money has, of course, inflated the stock market. It's inflated the property market, and obviously it's not sustainable. And only recently, now the Fed, Joe Biden as well, and obviously even in the UK and other economies around the world, we're now increasing rates, and there's been a pledge to start incrementally increasing them to combat the inflation. The problem with that, when you raise interest rates, it slows the economy down. It makes it less desirable for businesses and people to borrow money and stimulate the economy. But the fact of the matter is, inflation, what they claim to be the rate, is currently at about 8%. Real inflation rate's probably somewhere between 12 and 15%. You can easily see the real cost of inflation when you're doing your grocery shop, when you're putting your fuel in at the gas station, and many other different things throughout construction and like clothing. Everything's gone up ridiculously amount. The used car market, you've probably seen in various different areas of your life, travel, everything's gone up, bills, utilities. So the real inflation rate probably is running somewhere at 15%. So a high interest rate environment is an indicator that could lead, let's say, to a recession. But right now we don't have super high interest rates, but I believe we are heading that way. We need the higher interest rates if they want to combat inflation. That's if they want to combat inflation, because maybe they don't, because the US and other governments hold a lot of debt, and inflation's one way of dealing with that debt because it makes it more affordable to have. So another reason that could cause a recession is a stock market crash. So a stock market crash is very likely, and we've already potentially seen that start from November. Obviously, we've been rallying at time of recording here at the end of March. We have been taking a bit of a, let's say, it could be a dead cat bounce or a fool's rally in the S&P 500 and other equity markets. But if the stock market continues to crash, particularly with these growth stocks with high earning multiples that they're not actually profitable yet, or they're not earning very much, a lot of these stocks are going to crash. They've already been taking a big hit, and we could see a greater stock market crash. So basically a bear market, a sudden loss in confidence. So another reason, like we had in 2008 of a recession, guys, could be falling house prices, sales, and that is very likely in the housing market right now. With interest rates rising, it makes it more expensive for borrowers. So if you buy a house on a mortgage, which is how 95% of people buy property, maybe even higher, then obviously more expensive to buy homes, making your payments higher, making it less easy to afford a home. If there's less people going after the same home, prices in the market may have to adjust to obviously meet that demand. Now, another leading cause of recession is the surge in energy prices. Historically, it has always meant that a recession is on the cards. You can see these grey shaded areas every time that you've gone above the 50% mark, and that's real oil price percentage deviation from the trend. It basically has put the economy into a recession. So as you can see, we're way above that now, and we're probably going a lot higher, and it does seem that a recession now is inevitable. So with a likely recession looming, it brings me on to the sponsor, who I was really happy to accommodate when they reached out to me, because it's a service that I already use. In fact, I've been using them for about 6 weeks. So the timing was pretty nice, and I thought it fit very nicely into the content, because if you want to preserve your wealth and accumulate wealth, whether it's a bull market or a bear market, I highly suggest using a platform like Nexo, where you can unlock the power and let your cryptocurrency work for you like you've been working for it. Earn interest up to 17% annually. You're insured. It's a safe platform to use. 375 million insurance. You can add or withdraw funds at any time, so it's fully flexible. And you can borrow cash or stable coins against your stable coins or your cryptocurrency. Interests are only 0%. They start from free, essentially, to borrow against. You can see in my account here, I've got some of my portfolio with Nexo, about $26,000 worth. I have a credit line available, which means I can borrow that at 0% interest. I've already earned about $100 in the last 5 weeks for just having my cryptocurrency staked here. They have a great loyalty scheme where you can go through different levels and earn different interest depending on your commitment to the Nexo platform. You can also sign up for the Nexo card, which is fantastic because you can actually earn passive cryptocurrency just from your usual spend in cashback on spending. It's accepted worldwide, up to 2% interest cashback on all purchases, and you can basically use it in all different local currencies with no FX, no annual fees, no inactivity fees. So I highly recommend Nexo, and using the link in the video description right now, guys, you can get $100 in Bitcoin for free just for signing up with my link in the video description. You just simply need to deposit $1,000 in crypto or more, and you'll be getting that bonus. So now we know what a recession is. We know what could be the likely causes of a recession. How will it affect Bitcoin? How will it affect your cryptocurrency? The answer to that is one that some of you may not want to hear, but some of you may want to hear. The prices will go down. Whenever you have a recession, markets crash, particularly risk assets, Bitcoin is a risk asset. Now, in 2020, where we had the pandemic, the Black Swan event, Bitcoin was already in a bear market, and you could arguably say at time of recording, end of March 2022, we are in a bear market, and the price in 2020 went all the way down to about 3,800. We had about an 80% drop from its high prior to that. Now, what we could see happening for the Bitcoin price is the following. So this is the Bitcoin chart. We can see here at the end of the previous bull cycle, which ended December 2017, we had a big decrease in the price to this point, which was taking us to November 2018. Basically, this was just before the pandemic happened. It was a drop in price of about 68%. From that point, we did drop in price when obviously the Black Swan pandemic event was announced, and we dropped in price, as you can see here. It came down another 50%, and we came down to about $3,500. Now, what could happen in the event of a recession happening this year is this support line here, which is at 29,000, could indeed be broken. So far, what we've seen happen since November, in addition to the equity markets, we've seen the Bitcoin price come down at time of recording 35%. We were down 50% at one point. The main support you have for Bitcoin is $29,000, but in the event of a recession, I believe we would at least, at the bare minimum, come down to about the previous all-time high, which would be a 71% drop to about $20,000. If not, we could even go down a bit lower to about $13,000 to $19,000 mark. That would be the bear case for Bitcoin if we went into recession. I mean, you can see that from the top to the bottom on the previous cycle, it was an 82% reduction. Even if we came down to sort of, let's say, 12,000, it would be an 82% reduction. I think the lowest we could come down to is about 15,000, thereabouts, but more likely about 19 to 20,000, the previous high of the bull cycle. So the question now is, if this recession's going to come, how you can start protecting your crypto wealth and other investments. What are the best things to invest in right now, basically, what I'm doing to prepare. Well, basically, guys, I am holding a lot of stable coins at the moment. Don't get me wrong, for the long term, I'm very bullish on cryptocurrency. I have no doubt in my mind that Bitcoin someday will be worth $1 million plus. But in the short, medium term, I do believe that Bitcoin is in for a dump, as will all other risk assets. Now, what we can do is you could keep your cryptocurrency in stablecoin, either in USDT or USDC, or my new favorite, which is in UST, which is the stablecoin of Luna. UST, you can get about 20% interest on your cryptocurrency right now over on Nexo, link down below, by the way, and when you sign up you'll get $100 in crypto for free. Now, the reason I'm keeping it in stable coins is because I want to transfer it back into cryptocurrency when I believe the market has bottomed out. Now, I know they say you should never try and time the market, but essentially this is a more of a long-term swing trade rather than kind of trading for me. What I'm looking at is for the prices to bottom out, and I don't need to necessarily hit the bottom. I'm just not happy buying it at the prices that where Bitcoin's currently, which is about 44,000. I do believe we're going to see prices much lower than 30,000, and that's when I will start converting my stable coin back into cryptocurrency. And of course, on Nexo, you can stake your cryptocurrency and earn interest on your crypto and get a compounded effect. So the other areas, apart from crypto, I'm looking at very safe stocks like gold mining stocks. Gold should do very well in an inflationary environment, in a recessionary environment. I'm also looking at commodities, oil companies like Exxon, like Chevron. There's a few other oil producing stocks that I like a lot. I like uranium mining stocks right now because I believe we're going to go much more into the nuclear power way of things rather than using gas so much, using oil so much, particularly with what's going on in Russia. So you want to be in stocks that are already profitable, that are not overvalued. They're in fact undervalued, and there's plenty of them, particularly in these industries that I think are going to do very well, particularly gold and silver. They are going to, I don't think Bitcoin will stay down when I believe it goes down for very long. I think we'll probably hit the market bottom at some point late 2022. I did make a video on this, like I said, the link's in the video description of my outlook for 2022. So that's what I'm doing. That's what I think is happening. We've covered a recession. Do let me know if you enjoyed the video by leaving a like. Do share this, and remember guys, I post daily technical analysis, Bitcoin, Ethereum, so make sure you subscribe, turn the bell on. Thanks for joining me on this one. See you on the next one guys. Take care. Bye bye.